Hey everyone, good morning, happy Monday, and welcome to May 2nd, 2016, a new month of trading. I'm Frank Ochoa, aka Pivot Boss, with analysis for the upcoming week. Here's a look at the ES and the daily time frame. We've continued to trend steadily higher, and this is after we bounced off the 1800s here. We pushed through 1941s, and ever since then, you've seen a steady markup phase where every pullback has been defended, and right now we're right back at value. And initially, again, I continue to mention we were looking for a move into 2061 to 2077 half. And once price reached that area, we were looking for price to kind of die and trade in the range due to the fact that there's a large HVN there. So you go from a rejection zone, you see a price discovery phase, you take out an HVN in the process, and then you go to the major HVN and you facilitate trade. So that part has been fairly expected. What we were looking for was some sort of blow off top for a potential push toward 2000 to 2009, at which point we could see another buy opportunity back up and then a range continue on. We saw kind of not much of a blow off top, but we did see it kind of quietly push back and push into the 2046s. 2046s was our intraday support zone to watch for a fade. Friday, and our traders were able to catch it. That nice move off of 46s really nicely, which was great. And now prices are holding very quietly in overnight trading. Heading into pre-market here in RTH, we have prices trading around 61s. Inside day so far trading between basically around the previous month's close price. And so that's right where we are. So we're going to see how this thing plays out heading into the early part of the week. I would say any weakness here puts some pressure on these downside LVNs here, and that's where you could see a little bit of buy back up. So we'll see if that's how we start the week. If we push up, it's going to be important to see if prices can remain or push beyond recent resistance here at around 2090s, because failure to get above that zone will tell us we're moving lower. So we'll see how we start out the week so far. But overall, we've been trending higher very nicely. Pullbacks have been defended. So if prices cannot get back below 2050 here, the expectation is for a quiet push higher. We do have NFP coming out later on this week, so that's going to be something that the market's going to focus on heading into the latter part of the week. It could get a little quiet heading into that report, and then we see more fireworks from there. Let's take a look at the intraday time frame. Here we go. So on the intraday, again, we mentioned 46s was a very solid level. We were watching how this thing just dropped in the trading room here, and we were looking for 46s to be the zone where we see some sort of defense. And we came right into that level. We saw it build off that zone and push higher. The retest was also defended, and then it closed higher the rest of the day. So 46s were money, and that you can see a very nice little LVN there developing on a 5-day volume profile basis. I would say short term, you have 2055s here serving 2055 to 2044, 2054 serving as a key area of support. It was prior support, went below it for a moment, and is now back above. I think right now bulls want to defend that area for a continuation back up to see if how prices respond above 1270 and perhaps back toward 5-day VPOC. Again, if any failure to hold above 2050 occurs, we could be looking at a downside push here into those lower downside targets. So we'll see how that plays out. But right now, not a whole lot expected here around 2061s, since that's composite VPOC and we're chopping around that area. There's really not a whole lot of edge just yet. All right, let's take a look at crude oil. Crude oil has been very, very bullish. We talked about the fact that we were likely going to see a push toward 49s, but we needed a pullback first, right? And here was the pullback, right back into the zone. Price rallied right into the area of resistance and then came back and held 42.60 on a retest. And that was very, very important. That was kind of the last-ditch effort to defend and squeeze. Very nice push higher occurred off that area with a nice retest off of our 43.85s and a continuation into 46.65, which was a major LVN. We put that LVN there a while back, mentioning that if price rallies into that LVN, that could offer a pullback opportunity that could then thrust this thing into our next HVN, which is 49.08. So right there, that little blueprint is kind of my early idea for what could happen here with crude oil over the next couple of weeks. I believe if we see any pullback here and bulls are able to defend 43.85s, we could see a nice squeeze into 49.08, which could be the next major HVN to target. Beyond 49.08 actually has 54.32 as another significant HVN, along with 51.10 as an LVN. So those three price points, in addition to the 46.65, now very important right now. And if bulls can defend 43.85, we could see this thing mark up toward those prices. All right, let's take a look at the intraday time frame of crude oil. You can see right here basically overnight weakness, and then the VPOC shifted down to 46.60, and then now the stops came out, and now we're rallying back toward the previous close. That previous close went offered, so watch it closely, because if price cannot see acceptance above it, we could return right back to overnight value and continue developing within this trading range. 46.10 to 46.15 is going to be another area. Pushing into that zone could be an opportunity to fade back to value as well. All right, let's take a look at gold. Gold was one where we talked about the fact that if price pushes through those 12.75s, the stops are coming out. And that's exactly what it looks like right there. We knew that prices were coiling up. I mentioned that it was not good to trade in here because we're about to see expansion one way or another. The fact that we never came down and traded in the lower 25% of the distribution here implied that it could in fact lead to an upside break. And that's exactly what happened after prices saw gradual higher lows. Prices were defended off of value. Major LVN here was created after the market had gotten short time and again. And when the stops come out, a major release of energy occurred right into the 50% of expansion target at 1301.80. That's the 50% expansion from that key range. And now, in reaching the 50% expansion from the edge of the range, I would say any pullbacks likely to be defended wherever they may be defended at for a continuation toward the 100% expansion target, and that's going to put you at 1338. So this could be, or rather, 1338 to 1341 are the next two up expansion targets. So that's a high confluence zone from two different key levels or key ranges from over the past few months. So if I back this thing out a little bit, you'll see this larger key range here would be a 100% expansion target, and this smaller one would lead to a 100% expansion target, and both of those are within 4 points of each other. So that makes for a major magnet for price, and again, whatever pullback we may see as a result of this short squeeze could be a buying opportunity for those 1338s to 1340s. All right, let's take a look at the NQ lastly. The NQ has seen a major swing move in the opposite direction after we identified a potential top in price. So right here we mentioned this could be the short-term top, and if so, defending off this lower shoulder here was very important, and it was a perfect entry for a move across the range. What I mentioned before was we'd likely see a move against this low and this low, which could put us into 43.55, and at that point we could see buyers defend. If not, then 4,300 was going to be the level. And we saw buyers defend 43.55 the first day, push through it, and defend 4,300 the second day. And so far, we remain within a very bearish trend right now. 4,300 is important because it's the top of the key range here, and we saw prices go bid through that range and take us into 100%. Failure to hold above 100% opened up and moved back down, and that's where we saw our Friday low. In the trading room, as this thing was selling off throughout the day, we targeted 4,300 as the likely area to defend once the 43.55s gave way, and that led to a nice little bounce. We're currently 40 handles above that zone. So if 4,300 can continue to hold, there could be a nice reversal back toward the weekly pivot point at 44.04, with a shot at seeing a slingshot move back in the opposite direction as a trading range perhaps develops. So that's the early idea. Failure to hold 4,300s could be a quick push back to 41.88 half. Now lastly, looking at the intraday time frame, 43.42 is basically a key level here short term, and we'll keep an eye on that level as it is a 100% expansion level from an intraday key range. Above that level could push price back toward previous 5-day value. That's going to be about 43.85s, and a failure to hold above here gives you a big time retest at 4,300. You can see we have a little bit of an ascending pattern developing, and that projects strength ahead. So right now, if any rotation occurs, there's a nice ledge here at 43.20. That could be an area to defend for a potential retest back toward prior 5-day VPOC 43.83s. All right, everyone, that's it for now. Let's see how this thing plays out heading into the rest of the week of trading. Good luck, trade well, and happy Monday.